Hello, everybody. Good morning. Let's have a look at the charts, shall we? It's Sunday, so usually a bit of a crap day, as we all know. If it is, and if it does end up being particularly bullish, which I'll be surprised at, then maybe we'll be looking for continuation. But I think with the way that all markets close on Friday, whatever we do today probably sells off and waits for the Monday morning open, and then we'll just start the new week, right? As a fresh. So yesterday we were talking about how the 1 hourly has a fresh death cross, looking to move into the death cross and then reject from it. So I mean the price action was the most static I've seen in probably months and months and months yesterday. Basically sideways to the max. And this morning we walked up into the 200 exponential where we've rejected from basically. Exactly as expected. But with that, we haven't had a harsh rejection. If we move over to the 4 hourly, you can see that there's also another rejection. I think it was a 21 exponential. Yeah, it was, and of the 50 as well. So we're kind of stuck between supports and resistances, and as a result of that, we just got to see which one breaks. Usually, the clue to find out which one's going to break is to see which side the divergence lives on, or just the general momentum. So we did have a single drive of hidden bullish divergence over here. It's not normally enough to call any kind of low, but it exists and it counts for something. Since then, we've had creeping up with the RSI and the money flow index, so no bearish divergence, although it's only been a couple of days. If that, not even that really. So, not enough momentum to say it's going to reject, not enough momentum to say it's going to break. Basically, static, sideways. So yesterday I was basically saying how everybody's super bearish, and even a lot of people I see on Twitter saying that the top is in, it's the top now, it's the top. I mean, it's a very bold thing to say after a single day of down. Excuse me, I've still got a bit of a frog in my throat. The live stream will be taking place at home tonight. I'm still in Scotland this morning, but I'll be back home tonight. So if you want to join the Patreon, it won't look like this. It'll be done on a real computer and a nice microphone, or relatively nice. So it will be better production value than this. But yeah, like I said, a lot of people are calling the top already. I see it as just a very sharp rejection and a visceral response to some financial news that came out. But other than that, we're still above the 20 and the 21. So this is Bollinger Band. It's basically Bollinger Band strategy 101. If you're above the 20, more likely to remain above the 20. Same with the 21. And we found wicks into the 20, 1, 2, and we saw bodies above the 21, 1, 2, 3, 4. So it really is honestly trying to live up to the statistical likelihood of remaining above that portion of the band. And as a result, odds are in favour of remaining above that area, and that is $117,000. Now, prior to the dump itself, we did talk about the 4 hourly coming down to retest the 200 simple moving average, which is exactly where it came down to. I know some people don't like having all these moving averages on my chart, They say, oh, no, there's too much, it's hurting me, I can't bear to see it. But they're all here for a reason, and you can see the reasons, right? The supports and resistances exist on them for the most part. Horizontals count for something, but for me, moving averages, that's the boss of supports and resistances. And yeah, we caught it. That was fine, and it worked out for a little bit. We dug a little deeper, but we haven't retested the 200 exponential, which is also part of a golden cross. For the most part, we are above the simple moving average, and again, more likely to remain above these areas. And then, from a risk to reward perspective, you're more likely to get a V-shaped recovery from those areas. So we're here and we're above here, which gives us the idea that we could easily, well, not easily, but more likely recover in full and then go for continuation. That's just what these moving averages refer to. That's all I'm talking about, really. So that's your Bitcoin. We know that the Bitcoin dominance is going down. We don't really need to talk any more about that. As far as I'm concerned, it's breaking down still, and there's going to be bounces here and there. And we are actually coming to an area where you could see a bounce, but this is old news, really, or at least old news for the patrons. we're more or less at that area, I think within 1%. So a little bit further down on the dominance chart finds our way down to a big support basically, where you could easily see a bounce. But look, this is bearish across all time frames really. Double death cross below all moving averages, rejection on the simple, the 7 simple. Even the bullish divergence is nearly cancelled out. I'm basically bearish on the Bitcoin dominance chart. Bullish on the total 2 market cap. As you all know, we've had this setup here for a long time, and as a result, we've been appropriately positioned from basically ages ago. You know, we've caught every alt season on this channel now, and this one's no different. We prophesized this move and this move and more or less this move, and look at where they happen from. 200 simple moving average, 200 simple moving average. Each one of them gives you a V-shaped recovery and continuation. V-shaped recovery, and now we're looking for continuation. The prophecy is nothing more than statistical likelihood of success based on trend and momentum. That's all it is. So total 2 still looks good for more. If we don't get it, no big deal. We've still got that. You know, this is the market playing out now in real time. And now we've, you know, obviously a lot of people get bullish towards the end of any rally, or at least at a peak of a rally. Not the peak, but a peak. And retesting the previous local high is certainly an area for a peak. People start getting bullish on that. It's appropriate to, you know, think of pullback areas and where they would be. And look, it's a major resistance, and you got the pullback. And if anybody was tuned in to the previous live stream on Wednesday, we talked exactly about a pullback from Bitcoin, which is going to be about 3.5% at the time of the video. Obviously, it went down from a bit more because we went to a new all-time high overnight, but we still pulled back into the area that we thought was most appropriate. And then obviously from that we say, like, if Bitcoin's going to do 3.5%, you'd at least expect 7% from your average altcoin, maybe 10, maybe 15, depending on how volatile they've been, how much they've gone up. You've got to expect big ups and big downs in alt season, and this is really an alt season when you have the dominance decreasing. In fact, when you have the dominance pulling back and rejecting and continuing with its downward trend. That is an alt season. I know it might not be the alt season your granddad spoke about, but it is an alt season, and I think we're still in it. In fact, I'm pretty confident we're still in it. Now, finally, we'll just leave it on Ethereum, because Ethereum is going to be the main driver of the dominance chart until further notice. We had the breakout, which, you know, we have a measured move. The measured move takes you all the way up to $7,000. Don't call me a moon boy, because some people think $7,000 is nothing. $7,000 is the measurement of the mouth of the consolidation, and this is how you get the target. You know, you basically get the mouth of the, in this case, symmetrical triangle. You find out where you broke out from, and then you give a crude measured move, which is roughly around $7,000. Now, you know, I don't need this anymore. It's just old news that's been in there since before the breakout. But, you know, we got a breakout now, and where have we rejected from? The previous local high. This is all perfectly normal. Do you know what is also relatively normal after something like this? A pullback to the breakout zone. That's not uncommon. You could see, you know, a move of 3,600, and then from there you could see the 7,000 afterwards. I don't make the rules. There are no rules. You know, all we talk about is, are we able to make money or not? You know, and there's almost always an opportunity to make money, whether you're long, short, or holding positions, you know, hodling, investing, or just casual trading, whatever. There's always an opportunity to make money. But you do have to be realistic. Rejection here, perfectly fine. I didn't take any shots, only because I got a busy week and I was not really prepared to be messing around with leverage trading, especially when you've got like 4 or 5 hour drives and stuff like that. The last thing you want to know or have is leverage positions when you know that you cannot maintain them properly. But, you know, people on the Telegram were saying, oh, I'm looking to short from the high. I was like, that's fair enough idea. Why wouldn't you? And there you go. We had the writing was on the wall for Bitcoin, so why wouldn't it be there for Ethereum? But I don't think that this is it. I don't think it is over. I don't think this is actually halfway through. And with that, obviously, should come more more upside. Obviously, Dixie coming down still, and I think this is where we'll leave it, to be honest with you. Dixie still coming down, hidden bearish divergence on the way down, rejection on the center of a Bollinger Band on the weekly. This is still bearish. Bearish until we hit this trend line, really. Even when we hit the trend line and bounce, which might even be the low for the dollar, does not mean that everything in the world starts to go down. That generally will happen with the rise of the dollar, but initially just putting in a low for the dollar is not likely to do that. As we saw over here, guess where this was? January 2021, alt season, and we had June 2021 continuation of alt season. This is all alt season territory, massive market explosion territory. I know that things were different back then. You can't look at this and say it's exactly the same, but basically, this is kind of what I'm expecting to see, like a double bottom kind of form on the dollar. This is the most likely outcome. It doesn't mean it's the only outcome, it's the most likely. And if the double bottom forms, and then we start to move back up. It's only when you finally break bullish, reclaiming 20 moving average, getting supports on that, and in this case, reclaiming the 200 exponential and simple, which is basically the last areas for major rejection. We reclaimed all of those. That's when the bear market kicked in, and that's when the dollar really picked up pace. All of this was explained at the time. I told everybody that this is the most likely outcome. Most people thought that it's actually the dollar's going to keep going down and down and down and down and down. So this is very unlikely. I think that is the most likely situation here, that we do find a bottom around here and do the same kind of move and start moving up. And then obviously the dollar is going to be the best place to be once you've reached your targets on whatever it is that you are trading. The only difference would be is if the dollar breaks down from this trend line. And it's not an unreasonable expectation either. My only thoughts on that is that we're in a very long formation here. This has been going on for about 14, 15 years if you count the retest of the lows and the highs. And we also have a 200 exponential moving average here, which is all part of a huge golden cross on a monthly for the dollar. So the dollar is up only, really. Why wouldn't it be? It generally always is, and it should be. But in the event that we do break down from here, the next support is going to be around 92. And below that, we've also got a horizontal down here around 89. And the only reason that this is possible is that a rising channel like this would typically break down at some point. But we are looking at this on a monthly. The support initially, the very first retest of the support where the channel became a thing was 2011. So it's been going on for a long time, really, almost like a 4-year cycle of its own. What a coincidence. So I'm not saying that we're going to break down on the dollar. There is a chance that we do, and if we do, we've got supports on the way down, all the way down to the 80s. I'd be surprised to see it go lower than that. It probably wouldn't ever go down lower than that in this current climate, despite what a lot of people might think. Just don't think that that's a possibility. But rising channels do break down. Typically, they do break down and then get picked back up, and then they create a brand new thing. So we'll see how it goes. But for the moment, everything still looks good. I'm not bothered about further downside. If we get it, we get it. It's not a problem. Just take positions from low areas. I'm looking for a complete recovery, new all-time highs. Alt season, be selective on altcoins. Obviously, this is the beauty of the Patreon. We look at the ones that are good versus the ones that are bad, but generally everything should move through association. But if it's not got a good chart, then it's going to be harder. But you might get lucky. Either way, I like it. I like the way everything looks. I'm not spooked. I'm not scared. Everything looks fine, and is actually running in exactly the way I expected it to run. Not just yesterday or last week or the week before, but generally for the last couple of years, this is how I've expected it to behave. So the model fits, and until the model's broken, you go with the model that works, and you can see why, right? You can see why you do that. Right, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Maybe I'll see you on the stream tonight. Links in the description below. Take it easy.